Hello, I'm Dr. T and welcome to How to Invest in UK Property. In this video, we ask houses or apartments, what's best for investment? I'll explain the key features and types of houses and apartments, and then I'll compare them with regards to all of these investment criteria. You'll see many developers offering flashy new and off-plan apartments with promises of great returns. But what are the actual facts? And would an investment in a freehold house instead be better for you? Before we start, please remember to like this video, subscribe, and add comments below. And here's a bit from our channel sponsor, findukproperty.com, which is a family business I founded over 16 years ago.
Hi everyone, I'm Dr. T and I've been in the property business for almost 50 years. Here's a bit about me. In the 1980s, whilst working as a junior doctor, my hobby was computers and I co-founded one of the UK's largest PC manufacturers with over 3,000 staff. Computer making moved to China, and during the past 17 years, I researched and analysed the UK property market and developed a property business for 100% passive investors, which currently looks after almost 3,000 properties and is now run by my children and over 100 staff. I really enjoy helping people with property investment and making videos like this. Please hit the like button, drop a comment below, subscribe, and hit the bell. Let's get back to the video.
So let's first talk about houses. Houses are landed properties where you own the land as well as the whole of the property. Thus, they are freehold and you don't have any ground rent fee to the freeholder or service charges to the building manager. They can be classified by size, 2-bed, 3-bed, 4-bed houses, and so on, or by type, for example, terraced, semi-detached, or detached. Most houses are located in suburbs or smaller towns, not in city centres. On average, houses are older properties than apartments, but they're typically built well and designed to last longer. Apartments are also called flats, and they're located in buildings that are typically multi-story and contain multiple apartments at each level. Most apartments are in cities, typically city centres where space is a premium. They can be classified by size, type, and age. In terms of size, 90% are studio, 1-bed or 2-bed apartments. Most are standard residential, but you also have student pods or hotel room apartments, which I'll cover later. Apartments are also relatively new properties when compared with houses, and many are sold brand new or while still under construction. These are called off-plan apartments. Apartments are leasehold. This means that the investor effectively rents the apartment for a very long time, for example, 99 years. The investor is called the leaseholder and has to pay several fees. A fee called the service charges to the service manager to maintain the building and common areas and lifts, and a fee called the ground rent to the freeholder or owner of the building, and possibly also management or letting fees to the property agent. They're also responsible for repairs and maintenance of their individual apartment, and may also have to pay a shared cost towards special building work, for example, enhanced cladding or major lift repairs if needed, which can be very expensive. Now, there are many parties involved in the sale and management of apartments. Typically, the buildings are built by builders or developers who sell the apartment leases to investors, usually via a sales company. They may also sell the building itself to the building freeholder. The actual long-term owner of the apartment becomes the freeholder, who typically owns the whole building. The freeholder may appoint a service manager or sell the service contract to another company that looks after the common areas of the building and maintains safety, security, and repairs of the building. Student pods and hotel room apartments are special categories that are normally only sold to investors and may come with guaranteed rent for a limited period. They have additional restrictions on what you can do with them, and you have an agreement with the hotel or student management company. For example, you can't rent them out like a normal apartment. They can only be resold to investors, and there's no true resale market. So the capital growth can be poor or even negative, as they are difficult to resell. Off-plan apartments are typically in city or town centres and are built with investors in mind rather than owner-occupiers. They seem attractive as payments can be made in installments, but they have the additional risk that they may be delayed or never built. There is no true market price. Typically, the first apartment in the building may be sold early by the developer at a high price to a related party to establish a high sold price. In the first few years, there are no resales, so this then establishes the price of the apartments at a high level, which is not really reflective of the true market price. Let's now compare apartments with houses in relation to all of these factors. Like with any property, there are two main aspects to investment return: rental yield and capital growth. The gross rental yield on apartments seems reasonable. However, the net rental yield is lower because of extra costs such as ground rent, service charges, and the other fees I mentioned. So houses are better for net rental yield. In terms of capital growth, historical growth on apartments has been lower, and this is also likely in the future as post-COVID owner-occupiers prefer houses. Increasing service and other fees, shrinking lease, and the limited resale market may also depress future capital growth. So houses are better for capital growth. Your control and flexibility to develop or add value to the apartment is very limited. There are no automatic permitted development rights. You need freeholders' permission to do most things, and they will charge you whatever they want. Some leases restrict you renting out as short-term lets or Airbnb. With freehold houses, development and extensions are much easier. Apartments are easy to buy as existing owners, developers, and investors may all want to sell. However, when you want to sell, the market is mainly investors, and many of them prefer the new apartments, so they can be harder to resell. However, they're easier to maintain as the building and most of the services are maintained by the freeholder or service manager, although you pay a fee for this. There's not much to maintain inside the apartment, and they're more affordable, as in the same area, a two-bedroom flat may be over 30% cheaper than a two-bedroom house. But mortgages may be more difficult and much harder if the lease is less than 80 years, although this can be extended for a fee. But overall, they are more affordable. So, my personal view, if you're looking for personal use, want to be in the city, want something that's affordable and easy to maintain, but you're not looking for a high investment return, then go ahead and buy an apartment. But buy in the resale market as you'll get a better deal, not off-plan or new. Another option is not to buy, but rent an apartment yourself and use your money to buy an investment house that gives you income to pay your rent. For everyone else, and especially those looking for good investment return, buy freehold houses. Your returns would be better and you have more control, and they're easier to resell. At the end of this video, please watch the message from our channel sponsor, Find UK Property, which is our family business. Thanks for watching. I'm Dr. T, and this is How to Invest in UK Property.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself, and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed, and productive from day one. You become the owner and rent it back to Find UK Property so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension-type income or gradually build large property portfolios passively in a tax-efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.